Shares of Nvidia jumped 968% over the last 2 years, almost 10 times your money, because it created a bottleneck in artificial intelligence that could only be satisfied with its chips. And while shares of the chipmaker have flatlined for nearly a year, I found the next bottleneck in the AI theme and the 5 stocks that could see that same 10x jump in prices. Hey Bowtie Nation, Joseph Hogue here, and the data center boom is just getting started, but is causing all kinds of supply problems. We've seen Nvidia dominate the AI conversation, but here's the thing, the boom isn't about just one company anymore, and it's the picks and shovels play, the companies solving those supply problems that are gonna make you rich. Lead times for cooling systems are 5 times longer than just a few years ago. Delivery times for backup power have gone from a few months to as long as 2 years, and the quest for real estate close to power sources has led one company to co-locate their data center in El Salvador next to a volcano, because that's going to work out for everyone. JP Morgan forecasts just the spending by the 5 hyperscalers. That's the giant cloud services companies, Amazon, Microsoft, Alphabet, Apple, and Meta, to run their data centers will reach $1 trillion by 2027. And the biggest bottleneck, the biggest supply problem, is just starting to become clear, that the US will need an end-to-end upgrade to its networking infrastructure. This is going to cost hundreds of billions of dollars and will be a boom like we've never seen before for the companies involved. To understand why, just consider how a data center works. Data is held in storage or comes in through users and must move through those servers back to storage and out to applications. Networking equipment like switches and routers is the plumbing through which that data moves, and right now, the nation's pipes are way too small. AI without a major network upgrade is going to be like your grandma's dial-up modem trying to stream Netflix. BNP Paribas expects sales of data center switches, which routes that traffic, to double over the next few years, and for sales of back-end switches to quadruple. And I know all you old-timers like myself understand this, because you remember what it was like trying to download Barbie Girl off Napster in the 90s, and waiting 2 days for it to download 98%. That's basically what's happening right now with AI data centers. Companies trying to push a tsunami of AI workload through that infrastructure that was built when MySpace was a thing. And all this is just getting started. While most companies are running their data and AI use through the cloud right now, so using data centers run by Amazon, AWS, and Microsoft, they could eventually need their own data centers to manage all that traffic. Banks are going to be running their own AI fraud detection. Manufacturers will be using AI automation. The models will be so big that it's going to make sense to have your own data center. And that's when networking demand will really explode further. It's going to be like stuffing rush hour traffic through a Taco Bell drive-thru, and it's going to mean another data center boom and more spending. And I found 5 stocks that are going to cash in through it all. But first, I want to get your input on this as well, and the AI stocks trend. Is this a revolution or just another bubble? And if you had to go all in on just one AI stock, which would it be? So let me know in the comments below. Let's get started with Arista Networks, ticker ANET, but stick around and I'll explain what we're looking for and why these stocks are going to go higher. Arista is the data center switching leader, specializing in the kind of high-speed, low-latency networking that AI data centers need. Its EOS software is a key differentiator, offering better programmability, automation, and scalability compared to Cisco's legacy systems. The single unified operating system means better reliability, automation, and scalability across all of ANET's products. And its CloudVision provides real-time telemetry, security enforcement, and analytics for predictive and self-healing networks. Arista's advantage is in its AI focus, because AI data centers aren't like traditional data centers. They need that lossless, high bandwidth, and low latency networks that can scale up fast. Arista delivers this with its Etherlink portfolio, ensuring congestion-free traffic flow. Its AI spine switches handle multi-petabit data speeds, and the 7800 R4 AI spine scales out 50 times larger for those massive workloads. We'll see next that shares aren't cheap here, but Arista is going to be critical to that data center build-out, from training and into inference usage of AI, throughout that entire lifecycle. And proof here is in the growth, with 35% annualized growth in revenue over the 3 years through 2023, and expected 20% pace last year and for 2025 to $8.3 billion. I believe this is going to re-accelerate as we see that data center boom get started. Now, that said, I do have to temper my enthusiasm with how expensive the shares have gotten, now trading at 20 times on a price-to-sales basis. Now remember, that price to sales shows how much investors are paying for every dollar of revenue generated, and a higher multiple means pricier stock. Even on this year's expected revenue, its market cap is 16 times sales, so very expensive considering it was trading for just 11 times sales back in 2023, but that growth should continue for years and will take the stock higher. Next on our list, up 633% over the last 5 years, and shares doubling last year, Broadcom Inc., ticker AVGO, for its efficiency in networking chips and protocols. Broadcom provides the entire stack from switching, interconnects, and protocols to custom silicon built specifically for AI workloads. And unlike the legacy InfiniBand, Broadcom's Ethernet-based AI networking delivers 10% faster completion times, 30x faster failover, and better scalability. Broadcom's Jericho 3 AI switch fabric ensures the kind of high bandwidth, ultra-low latency AI clusters need with that lossless networking at 800 gigabits per second per accelerator. Just for overall scale and efficiency, it's hard to beat Broadcom. The company's Tomahawk 5 and Jericho platforms support tens of thousands of AI accelerators with balanced, congestion-free networks. The Thor 2 NIC and PCI switches solutions drive that end-to-end connectivity and can cut power consumption by as much as 50% while still extending reach. While competition is going to be fierce in this AI networking boom, Broadcom already has the kind of industry-wide adoption with 60,000 plus AI cluster nodes running its hardware. The company's dominance in custom silicon switching and connectivity makes it the backbone of AI-focused data centers. And the fundamentals here are eerily similar to what we saw with Arista. Broadcom has grown revenue at a 23% annual pace to $51.5 billion last year. That is slower than ANET, but has that same 19% growth expected this year to $61.3 billion in sales. Growth that is likely not only underestimated, but that will continue for years. We see here the same high valuation on shares at 21 times with that price to sales valuation. Broadcom traded at just 10 times sales as recently as 2023, so again, very expensive here after that 94% surge in the shares last year, but you can't avoid these stocks that are going to continue to define the AI investing theme. We're just getting started on our list, but staying on top of these market trends means staying up to news, and for that, I want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news, strategies, and trends you need to know. Each week before the market opens, I'll show you what I'm watching and the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community, so look for that sign-up link below. Back to our list with Lumen Technologies, ticker LUMN, a company reborn under the AI networking theme and up 189% over the last year. Lumen is positioning itself as a key player in AI networking by leveraging its extensive fiber infrastructure, signing some strategic partnerships. The company last year secured $5 billion in AI-related contracts with the potential for an additional $7 billion more. And remember, this is a company with just $14 billion in total annual sales, so that creates a backlog that's going to help that overall growth. A recent partnership with Corning enhances Lumen's network capabilities here, utilizing its advanced fiber optic technology to meet AI's high data transfer needs. The company also has collaborations with those hyperscalers, Meta and Microsoft, to expand its network capacity. And that network infrastructure is really the company's competitive advantage here, an extensive fiber network already in place. Also here, Lumen's network as a service model provides the kind of on-demand connectivity for businesses to efficiently manage their workloads. And here, that upside potential might not be reflected in the stock price yet because, frankly, the results just aren't there. Sales are expected down 5% this year to $12.3 billion after already having fallen 32% over the last 3 years. The company is struggling under a $20 billion mountain of debt put on during its acquisition years and in the 2017 merger with Level 3 Communications. Because of this, the shares trade for a price of just 0.35 times sales, though for these highly indebted companies, you also want to look at this enterprise value to revenue valuation, which accounts for all of that debt and is at about 1.6 times. That's not as cheap as the other valuations make it appear, but if the company can leverage this networking trend to higher sales, we could see the stock continue to run higher. So maybe it's not a traditional data center play, and the next stock won't be either, but for these big picture themes where everyone is already talking about them, you really need to look further out beyond the obvious names. I haven't always done that myself either. Back in the 2000s, after the dot-com crash wiped out all the money I invested during the Marine Corps, I was too focused on safe dividend stocks and completely missed Apple's rise into smartphones. Since then, I've made it my mission to focus on those trends and the undiscovered stocks within them before they explode. So while we focused on those data center stocks so far, American Tower, ticker AMT, also has a play here and is relatively cheap. That's because that networking data transfer doesn't just happen within the data centers, but also outside it, and with AMT's 148,000 global communication sites is going to be a critical piece. AMT's infrastructure is already optimized for 5G and AI workloads, with its fiber-backed tower network allowing hyperscalers to rapidly deploy their services. Mobile data traffic and connected devices are growing exponentially, exponentially, requiring tower infrastructure and putting a premium on AMT's services. As AI workloads shift to that edge computing, American Tower's strategic multi-tenant sites is going to become a competitive advantage for the AI-powered applications and its revenue growth. Now, this isn't quite the fast-growing industry that we saw in those other stocks, with the company here growing at just 10% annual pace over the last decade. But earnings and funds from operations are more stable here with those long-term leases and could get a boost from that networking theme. Using Nareit's data for the real estate trusts, we see AMT trading for about 17.5 times on a price to funds from operations basis, which is more expensive than its competitors, but deservingly so for that largest global telecom REIT. As we see this AI data theme play out, I think growth is underestimated here and could bring a surprise pop in the stock. We've still got my favorite stock for the networking theme, one with a 40% plus upside, but data centers are more than just networking. Check out the video in the corner here or look for the link in the description for the stocks dominating each component of the data center boom and the one I'm buying above all the rest. But here, my favorite stock in the AI networking theme is Advanced Micro Devices, ticker AMD. And I know all you out there in the nation are getting tired of me talking about AMD, but this stock is terrifically underappreciated and a steal at this price. I mean, AMD is like the kid in high school everyone ignored and then shows up at the reunion driving a Ferrari. Unlike Nvidia's CUDA Plus InfiniBand, AMD offers an open AI ecosystem through ROCm that gives developers greater flexibility and avoids vendor lock-in, an offer that could lead to better adoption considering the cost for Nvidia's priciest products. AMD's 300 series, especially the 350 upgrade launching later this year, is going to feature a 35x performance increase, very competitive with Nvidia's Hopper 100 chips on inference benchmarks. Dell recently announced it would be using AMD chips for corporate customers for the first time, where it previously only used AMD for consumer PCs. IBM has also said it would be using AMD 300 series in its cloud services starting in the first half of this year. More importantly here, AMD's strategic acquisitions of the Pensando and Xilinx are game changers within this networking theme. Pensando brings its data processing units, enhancing low-latency, high-performance networking, and directly competing with Nvidia's Bluefield. And here, Xilinx adaptive FPGA technology strengthens custom AI acceleration and networking optimizations, making AMD's infrastructure even more scalable and competitive. And while the company's data center sales for Q4 disappointed impossibly high expectations, revenue still grew 69% over the last year for the segment, and is going to power those sales going forward at a very strong 30% operating margin. So given these competitive strengths, some even against Nvidia's dominance in the AI theme, it doesn't make sense that a company growing revenue by 20% plus a year is trading for just 7 times on a price-to-sales basis. Expected revenue of $32 billion this year makes it even cheaper at just 5.7 times sales. That is at least a 40% discount to the 8x valuation it was just last December. And this stock is worth double the current price on its longer-term average multiple. Nation, if you've ever looked back on a stock you didn't buy, cringing at the money you could have made, do not miss that opportunity again. I know the chart on AMD looks fugly, but this comes down to valuation and patience. The same kind of valuation and patience we saw when I said to invest in SoFi Technologies back in late 2023 at around $5 a share. It took a while for that valuation to prove right, and many didn't have the patience. But that stock is now up over 200% in less than 18 months. That same kind of patience is going to pay off in shares of AMD. Get the weekly bowtie free with the special invite link in the description below and stay up to date on all the stock market news and trends you need to see. Or click on the video to the right for the one data center stock I'm buying above all the rest. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.